You were listening to chartingwealth.com for Wednesday, the 23rd of August, 2017. Let's zoom into these charts, see what's going on. S&P 500 up for the day, 1.05%. The Qs, that's the Nasdaq 100, up a big 1.52%. We see that TLT, 20-year bonds, down 0.39%. Gold down 0.45%. Again, remember, we're in the summertime trading zone. Things will get better and more clear as we get into the fall-winter trading zone. Typically, again, remember, less volume, so we have to pay attention to these charts on a daily basis, really checking out what's going on now. When we look at the weekly charts, we see that things are going according to plan. We had the weekly vertical crossover occur back on the week ending the 11th. It's a laminated because underneath that blue is the gold. Because why? We had the weekly and the two-day crossover at the same time. And the beautiful thing about using freestockcharts.com or TC2000 is the ease of use, how easy it is to actually draw the lines that we do on a daily basis with the trend lines. Now, that was my fault. I over-laminated a trend line. But to put those trend lines in place and be able to set them up, to colorize them so that you know exactly which kind of trend line it represents. Gold, of course, represents our weekly trend lines. And, of course, we just connected two candles. In fact, we could actually go all the way back to that laminated crossover and connect the first two candles. In fact, it's best not to work on a week that has not completed yet, a candle that has not fully drawn. So we'll just connect the week 1 ending on the 11th and week 2 ending on the 18th. August is both of the month for both of those candles. And we have our latest candle being drawn. We see an acceleration down in the derivative oscillator, and the price percent oscillator is still moving down. Now let's look on the S&P 500, go from the weekly chart to the 2-day, and we see that the 2-day currently is the first day of this latest 2-day candle after a big drop for that candle ending on the 21st, following a drop, the candle ending on the 17th. That was last Thursday. The 2-day candle that ended yesterday represented Friday and Monday. And of course, we see here on Tuesday afternoon, we have a green spinning top with a wick on the bottom and on top, means indecision. Derivative oscillator is where it was on the candle ending on the 21st. And we see that the huge move down in our price percent oscillator has flattened out, still trending down. As we plug into that 4-hour chart, it is getting close to a crossover going up, has not crossed over going up yet. If indeed it does, that is a warning sign. Also, penetration of the weekly and the 2-day is also a significant warning sign to you. Let's check out the 2-day chart. We can readjust actually we do need to readjust. In fact, it's important to do so. The 2-day trend line, so that as we look at the 4-hour chart, we can see that we are getting very close to a penetration of that 2-day. If the 2-day crosses over going up and there's a penetration of the 2-day trend line, that should be a real warning bell that there's a significant pullback underway. You may wish to take yourself out of the position and wait for a crossover going back down again. If there's a violation of the weekly trend line, then even more of a warning. We have questions all the time. When do I get out of trades? When do I pull the plug? Well, that is, again, totally up to you. Whenever there's a violation of the 2-day, and again, the 4-hour is a warning. If there's a violation of the 2-day vertical crossover, in fact, you get one going in the opposite direction, most definitely. But you have warning triggers that go off when your 2-day trend line's violated, when your weekly trend line's violated, and of course, the big warning signs is when you have vertical crossovers. 4-hour is the first one, the 2-day is the second one, and the weekly is a definite, you've got a change going on here. So Continue to monitor that, particularly in the morning, see what's going on. This pullback may just be a short-term one. It may continue to go down. Remember, all things being equal, the markets always tend to move in the direction of the largest chart, which is what? The weekly chart, which again, crossed over going down back on the 11th. We'll move a little faster as we go through the rest of these charts. We know we have 10 minutes. That's all we ask. Qs, the Nasdaq 100 down, up 1.52%. We're in our third week of down movement. Derivative oscillators lost a little bit of its downward energy. PPO, not so much. Price percent oscillator. Let's look at what's going on the 2-day chart. We see that it's pretty much gone flat. Derivative oscillator still about the same position it was with the candle ending on the 21st. Now remember, this latest 2-day candle, it's just the first day. It's a spinning top. It could be a red top. It could be a red down candle tomorrow. We'll continue to keep our eye on that. What do we see going on the 4-hour? Getting close to crossing over, going up. So pay close attention to that in the morning after 10:30 as to how it settles out. Okay, back to the weekly chart, moving on to TLT. It was down 0.39%. Of course, we have 3 weeks of strong up movement. If we hone in a little closer to the 2-day chart, we can see that that 2-day chart is in a confirmed uptrend since back on the 9th. Maybe we could draw a little bit better trend line. In fact, we can get a little closer one and looks a whole lot better. And of course, we're trying to connect 3 candles, which we have done. We're still above that, even with a little bit of down movement over the course of the day. Let's check out that 4-hour chart. It is getting close to crossing over, going down. Derivative oscillator is still positive. So again, keep an eye on that in the morning. If the up movement in the stock market continues, then of course you can expect bonds, which are typically inversely correlated, to move down. If you do have a crossover on that 2-day trend line, be very cognizant of that, along with the crossover in the PPO. The PPO and the price percent oscillator and the derivative oscillator both cross over at the same time. That is a real alarm bell, even on the 4-hour chart. Okay, back to the weekly chart. Let's continue to move through. Lastly, we'll look at gold, down 0.45%. Of course, we've got 6 weeks of up movement, actually going on 7 weeks. Well, if you count the first week of the turnaround, which is a filled-in green box, we actually are going into the 7th week of up movement in gold. Derivative oscillators still moving up strongly, as is the price percent oscillator. As we look at the 2-day chart, we see that things appear to be flattening out a little bit. We have a red spinning top, almost a doji being drawn. Derivative oscillators continuing to lose energy, so we'll keep an eye on that. But again, what's our big definitive move? Look at what happened in the morning. Gold crossed over going down. We don't have a corresponding crossover yet on the derivative oscillator, but that may be coming shortly. Continue to keep an eye, particularly if it goes below the wick of the morning of the 22nd, and you continue to see that occur. Again, gold's sort of been getting funky here over the last 4 or 5 days. So watch what's happening with gold. It's been doing something it's not done for a while, and that is oscillating. When things oscillate, our derivative oscillator is hard to use, and our price percent oscillator is hard to use when they're just sort of waffling around, laminating. But again, if this separation continues to occur, then of course, pull any plug on up movement in gold until that 4-hour chart starts looking stronger. Of course, those of you who like to trade when gold is going down, you could look at a put position in one of your virtual trades. Folks, that's where we are as we end the day on Tuesday. We go into the 23rd, Wednesday, 23rd of August. We so appreciate you being with us. If you are just getting started in doing what we do, and that is reading stock charts, I very much urge you to subscribe at our website, chartingwealth.com. We also encourage you to please subscribe to us on YouTube also. But if you want all the goodies and freebies, you need to subscribe at chartingwealth.com also. What do you get there? You get our How to Read a Stock Chart video. You get the layouts that we use at freestockcharts.com for free with the instructions on how to sign up for free stock charts and to get our layout. In addition to that, you get our 3 big worksheets. The trade worksheet that you use on your virtual trades. Remember, we're not a stock calling service. We're an education firm. We want you to virtually trade with us until you get good at this. Then you can make up your own mind to spend real money any way you want. In addition to that, we also provide you with our daily market worksheet. We ask you to fill out every day as you listen to the 10 minutes of knowledge during this podcast. That is the charts that we review. And we ask you to, once a week over the weekend, when you're listening to our comprehensive review and forecast, which is our broadcast for Monday, to fill out that weekly market worksheet. If you do those 3 things, practice trades and use the trade worksheet, fill out the daily market worksheet every day, that is Tuesday, Wednesday, Thursday, and Friday. And then for Monday, you listen to the comprehensive review and forecast and fill out the weekly market worksheet. You will be doing everything you need to do to supercharge your training and to become a chart reading expert. And my men and women, if you can read charts, you have the keys to the kingdom. You have the golden chalice. You have the ability, if you can do it, to trend follow and to actually be able to read the stock market. If you can follow trends, you are there. You are there. That's what we do here. That's what we talk about. And particularly during the fat time of year, that is the fall winter trading zone, a few good months, you can do it. Go back and look at what we were able to post with incredible accurate trades. Those were during the fall winter trading zone. It's the best time of year. You need to practice year round, but when you get good at it, particularly trade money during that time, you have to take time off work. Maybe not work as hard and work on this a little more and pay more attention. But again, really, once you get good at this, 10 minutes a day. That's all we ask. God bless, my friends. All the best from the entire team here at chartingwealth.com.